Thanks for joining us at the Business Growth Cafe, where each week we select from a menu of topics for a focused discussion with an industry expert to provide insights that can impact your business's growth. With your host, Angelo Ponzi.
Good afternoon. I am Angelo Ponzi, your host here at the Business Growth Cafe. Thank you for joining us. Each week we select from a menu of topics that can have an impact on your business growth to discuss with experts from a wide variety of disciplines. And today at the cafe, I'm excited to have Paul Peffer, CEO of Tax Relief Assistance, on our show to discuss the impact of the new tax laws and how they can have an impact on your business. Welcome, Paul.
Thank you, Angelo.
I'm excited to have you here. We actually have a long history together. We go back, I don't want to date us, let's say a few years back. We've known each other. Actually, at one point in time, you were my client many years ago in the technology industry.
That's correct.
So before we get started, why don't we talk a little bit, tell the audience about Tax Relief Assistance and what the business is about and about your services, if they use your services or not use your services, and how they can impact their business.
Well, Angelo, I had been doing all aspects of tax preparation, tax resolution, and tax consulting for clients. But over the past few years, and the prognosis is that in the future, tax preparation will become more and more automated. And so I decided that what was most interesting for me was to work on tax resolution cases, on people that owed the IRS substantial amounts of money and potentially had to let it go to a point where they were about to have all their assets and their bank accounts liened and levied. And there are a number of strategies that can be used to stop the collection efforts of the IRS or delay them or let them run out the clock or the 10-year collection period. But it really was an area that interested me, and it's certainly a more profitable area than just doing tax preparation. So.
Okay. Well, ultimately, we'll talk about that. We don't want to let the clock run out. Otherwise, they might be moving from their house in maybe Beverly Hills to an 8x8 at the local jail. But you're an enrolled agent, and until we started talking again, I had no idea. I'd never heard that term before. I've heard of CPAs, I've heard of tax attorneys. So, what is an enrolled agent, and why does that make you different when it comes to tax?
Well, an enrolled agent is someone who has taken 3 extensive tax exams that are monitored by the IRS. And the IRS actually oversees enrolled agents. And enrolled agents, because of their license from the IRS, are able to practice at least federal tax law in all 50 states. So, but you don't have to have a college degree in accounting like a CPA does to be able to get this. You can get it, and typically a CPA can take between 6.5 to 8.5 years by the time they get their, it's 5 years of education now, and then take the exam, and then it's at least 2 years of apprenticeship before you actually, get the, and you still, as a CPA, you may not have had any work in tax, because they focus on audit and business law and representation in other areas. So the enrolled agent, and there's about 55,000 in the U.S., focuses directly on tax, and they have to keep up 72 continuing education hours every 3 years. They're licensed 3 years at a time.
Okay. So really, then you're a specialist when it comes to the IRS and dealing with the IRS. And the fact that you can go in all 50 states versus, let's say, if you went to your CPA, they may not be as versed in tax. And if there was something outside, say, the state of California, they wouldn't be able to do that as well.
Right. There is a new thing called CPA mobility that allows them, if they go out of state, to ask the state Board of Accountancy in whatever state for an exception. But other than that, we are, the easiest first choice, and probably have more tax law than anyone because it's required. The CPAs have continuing education requirements, but it's not specifically in tax.
Okay, well, thank you for that. I think that's going to bode well for the audience as they understand your perspective and what you're talking about. But this is a business show, so let's start with a discussion about some of the key changes in the new tax law. I think it's officially called the Tax Cuts and Jobs Act of 2017. That is a mouthful. I thought they'd do a better job at branding that. Maybe they need to give me a call so I can take care of some of that. Now, there is a new 21% new corporate tax rate for C corporations. However, if my reading is correct, that does not apply to non-C corps.
That's correct. It's only C corporations. It doesn't apply to any pass-through entities like LLCs or an S corporation or sole proprietor. So that 21% is strictly for corporations taxed as corporations.
Okay. So I'm an LLC. So obviously I thought I was going to get this 21%. I'm not. So what do I get out of all this as a LLC?
No, you can still get the deduction as an LLC.
Okay.
You can't get the 21% tax rate. With the QBI, the qualified business deduction, the 20% for pass-through entities, you can get down to an effective tax rate of about 29%.
All right.
Okay, it's not as close as 21, but it's certainly better than...
It's in the 20s.
Better than being in the 30s. So that is going to be the biggest challenge for everybody this year, is how to take and how to calculate that QBI deduction. But as an LLC, you certainly are entitled to take that deduction.
Okay. So with these new tax changes coming along, I'm not a betting man, but I would bet that a lot of businesses are not prepared, especially small to medium-sized businesses, to really incorporate and take advantage of these. And of course, in a few months, the clock is going to run out. We're going to hit January 1st, and whatever kind of plans they had to take and do before they hit the end of the year are going to bypass them. So for the audiences out there, are there any recommendations or tips you can give our listeners to help them avoid year-end 2018 tax issues that they can prepare properly for this new tax law?
Yeah, I guess the first one would be don't wait till the end of 2018 to try and do this. I would immediately, since we have pretty good guidance from the IRS now, get together with a tax consultant and see first if your business qualifies for the 20% qualified or pass-through deduction.
Okay.
That would be the first one I do. The second one is to make sure that they're in compliance if they have been able to make quarterly estimated tax returns. Certainly the payroll taxes, which are called trust fund taxes, you can never be late on, and you can't be late on the reports.
Okay.
The big,
I'm going to interrupt for a second, but where do businesses typically get in trouble? Is it payroll tax? Is it sales tax? Is it filing their quarterlies, or all of the above?
Well, it's all of the above or more. First off, one of the big ones I have that I have personally seen is individuals that have come in and have mixed personal and business expenses, where they'll use the same credit card for both and then just hand me the credit card statement like I'm supposed to know which ones. So that and improperly setting up their accounting, not having somebody help them, thinking, Intuit has promoted that you don't need to be an accountant to use QuickBooks. I would disagree.
I would disagree as well.
So they usually come in with some mixture of the both, and so it becomes an accounting project before a tax project. But the other things that businesses can do before the end of this year, we have in 2018 a bonus depreciation. So and the limits, like for Section 179 expensing, have gone from $500,000 up to $1 million. So you can write off $1 million.
I wish.
And in property in the first year, you can take the bonus depreciation. There is a schedule on cars, but it's substantially more, $18,000 the first year versus $10,000. But a lot of those things, it should be done earlier in the year. You know, if
right.
you're planning to buy company cars or something, you know, you need to know about that before the end of the year and plan for it.
So with 3 months left of the end of the year, making these moves maybe not as beneficial if they had done it last January, February.
Yeah.
And staying consistent, right?
Yeah.
Making sure the reports are done, falling behind. I remember years ago, one of the businesses that we used to deal with got behind in their sales tax. And then one day they got a notice and got a bill for $50,000. And of course, that was fairly shocking to them. They never missed their sales tax payments again.
I guess. Yes. I had people, and it's not uncommon that people don't pay their payroll taxes. Oh, it's the worst thing you can possibly do. I mean, the penalty, it's a felony not to submit those. The penalty can be up to 5 years in prison for not submitting employees, trust fund taxes. So it's a big mistake. But I think the biggest issue is, for businesses, especially small businesses starting out, is seeking out a tax advisor and some professional help earlier in the process rather than later.
Okay.
Is the biggest thing, yeah.
Well, you're talking about stiff penalties and things like that. So obviously filing false tax returns, tax evasion, false statements and documents, failure to collect employment taxes, failure to pay taxes, on and on and on. Those are considered tax crimes, and the penalties, I believe, are extremely stiff.
Yes, the failure to file failure to file a tax return can be up to a year in jail and up to $100,000 for an individual and $200,000 in civil penalties for a business. And then if it's tax evasion, which is a more serious crime, it can be up to 3 years in prison. The criminal penalties as well as the civil penalties, which can be up to 75% of the tax.
That'll certainly have an impact on your business growth, won't it?
Yeah.
Let me not to get too far off the tangent, but I'm just curious. Obviously, there's famous cases and individuals that business owners who failed to pay their taxes and were caught by the IRS. You got one or two that you can toss out there real quickly?
Yeah. One of the ones that probably everybody, don't have to be too old, to know Nicolas Cage and know that Nicolas Cage is
the actor.
Yeah, the actor. And he's been making about every possible B-grade movie he can to try and pay off his taxes. He got into a lot of debt back in 2009, $40 million.
Wow.
And he was able to make a $6.2 million payment, but he continues to this day, since 2009, to continue to pay off his tax debt. So they don't, they have 10 years to collect for each tax year. So he's right at the point where some of it might drop off. But Leona Helmsley, the Queen of Mean, Willie Nelson's another famous one.
Al Capone?
Al Capone, he goes back a ways, but of all of the illegal things that he did, the way that they finally got him into prison was on tax evasion.
Okay.
He went to prison for 11 years, and then they let him out because his brain was all messed up.
Okay. One of the things that certainly has been in the news and in a debate in Washington has certainly been about the health care law, right? So this past spring, of course, with the changes going on, there doesn't seem to be any mention of the individual mandate. At least it's not in the news as it maybe might have been. So can you tell the audience, is that over? Does it still happen? Is it still going on? Should individuals and corporations still be concerned about the individual mandate this year?
Yes, they should. One of the things that I think was kind of misleading is at the early part of the year, after the December bill passed, the Tax Cut and Jobs Act, people thought that the individual mandate was going to be gone in 2018, but it still survives 2018, and it doesn't go away until 2019.
Okay.
So on their 2018 taxes, they're still going to have to answer the question, did they have health insurance, and if they got premium assistance, they're going to have to reconcile that on one of the forms, what they got versus what they're entitled to.
Okay, but
now in 2019, the mandate goes away.
Okay.
But the premium assistance doesn't go away.
Okay.
Whether and what will happen to the Affordable Care Act at that point, I don't know. The goal was to get a lot more people insured. The majority of those people that came on the rolls are staying on, but if premium assistance would drop off, a lot of people would drop off the rolls again
and lose their health care.
Yep.
Okay. Now, as your company name implies, you provide tax relief assistance to both businesses and individuals. Obviously, as a way to avoid the dreaded IRS letter, is planning and preparation, as we've been talking about, and filing the correct information. But before we talk about what gets people in trouble, you hear about people that get scammed because the IRS called them and looking for a credit card and stuff like that. Now, my understanding, and you can correct me if I am wrong, is the IRS will not call you. They will not send you an email. Are you listening out there, folks? They will only send you a letter. Is that correct?
Yes. They never make first contact by phone. It's usually by letter. They rarely do anything much by email. They prefer to have stuff faxed in or faxed back. But, yeah, it's... I'm sorry, what was the
people getting scammed.
Oh, people getting scammed. No. The one point I wanted to make is that in 2006 again, and this happened years ago, but in 2006, the IRS, at the request of Congress, hired outside debt collectors to collect, and they collect very old tax debt that nobody has touched for a year, 365 days, or that nobody in the IRS has been assigned the case to collect, and it's well into its collection period now.
Right.
So those people, are contracted debt collectors, just like ones that call you for credit card debt.
Okay.
Okay, so they will be, but they are supposed to explain who they are up front. Okay, and the people that they're calling know they owe tax money.
Okay.
So
okay.
That's the only exception, yeah.
So in your business, though, both people and businesses get in trouble. So what might trigger, and is there a hierarchy to the trigger that you might get a letter from the IRS? And is that over a period of time? So what's the trigger? Let's start there. What's the trigger for the IRS that their auditors might decide to send you a letter?
Well, one of them this past year has been the reconciliation of the premium tax credit. The number of people after they filed got a request from the IRS to send in their 1095A, B, or C, whatever they got as far as the health insurance document, and then their reconciliation of any premium tax credit on 8962. But every one that we had was also referred to the Georgia office for an audit. Okay, so basically, if the IRS believes that you took a deduction wrongfully or they don't agree with how you calculated it, they're going to bring your return in for review, and then they aren't just going to focus on the one transaction. If they bring it in for audit, they're going to look at everything on the return.
It's the fox in the hen house, right? They just start to dig?
Yeah.
How far back can they go?
Well,
and I've heard that. Like if they do an audit in 1 year, they can either go 3 years back, or what is the rule?
Well, for individuals, it's 3 years, okay? There are exceptions in the case of tax fraud that they can go back 6 years, and if it's really bad, they can continue to go back farther than that. But it's basically 3 years for individuals, 6 years for businesses, and 7 if you have any worthless securities or business bad debts that you took on your return.
Okay.
So they can go back quite a ways, but they have dates too, and what they call their CSED dates are, they have 10 years from the date of the return being filed or the tax paid or partial tax paid to come after you and audit your return. After that 10 years, that debt's forgiven if they haven't collected it.
Okay. So and this is a personal question. How long should you keep your tax forms and your files in case they decide to go back? I mean, 10 years? Business and personal.
Okay. The actual paper copies, if you print out a paper copy, which is kind of weird because the IRS says, you're supposed to keep original documents.
Right.
3 years for individuals, 6 years for businesses, 7 years for both if you've had worthless securities or business bad debts. Okay. But we rarely sign those anymore. Everything is filed by e-file.
That's right.
So, I tell people, my own personal thing is, since you can keep 100 years probably on a flash drive,
yep.
There's no reason not to keep them digitally. You don't have to keep all the paper after that time.
So we can make it digital, and that's accepted by the IRS. Okay.
Yeah, I mean, at the time, if they request it, you have to print it out, and you send that form to them. They aren't going to let you send a digital because they don't know what tax program it came from.
Okay. We hear this all the time. I hear it on the radio, and I probably from some of your competitors, I will say. But it's like, don't pay the IRS what you owe, right? They'll settle for less. Now, that sounds as, frankly, unbelievable as I can think of. So are these things true?
Well, there are a number of ways and strategies that are available for taxpayers that get into trouble with their tax bill that they owe to the IRS or to the state. But if you don't do anything once you get this notice of intent or final notice of intent to levy from the IRS, first thing you have to do is within 30 days file for a collection due process hearing. Otherwise, you won't get a hearing at all. Okay, you can talk to them on the phone, but again.
So I've heard these other terms, right? As offering compromise, installment plans. I mean, these are kind of tax strategies or relief strategies, and are there others?
Yeah, the offer and compromise is one that starts out with you having to fill out, or your tax person fill out the financial statement basically on their form, and then there's a calculation that you can calculate based upon your current income and your debt as to how much you can pay a month. And even if that doesn't pay off the debt in 10 years, the IRS in some cases will accept that. If you make an offer that's too low, like 10 cents on the dollar,
right.
And not if you're 30 years old. If you're 65, 70 years old and going into retirement and you have a little bit of Social Security to live on, they aren't going to chase you. But at 30, they're not going to let you off the hook.
Yeah, I've heard some the gig economy and some of these, I'll call them millennials in their 30s that figured they didn't have to pay their taxes, and a few of them got caught, and now they're on payment plans. They're paying $25, $50 a month, but like you're saying, 30 they go on. So let me we're coming down here, Paul. We got 5 minutes left. 5 minutes, give or take. 3 minutes. Okay, that means 4 to me. Italian. So let's first talk before we move into the final. What are 3, 4, 5 tips that you might give businesses and then consumers or individual taxpayers about what they should do in the next 90 days? Besides, you should have done this 9 months ago.
Okay. Well, for businesses, there's still time to see whether you qualify and make some adjustments in wages for the owner to see if you qualify for the 20% pass-through deduction. Okay. That's the biggest one, okay? And then typically corporations don't have problems with their health care. They have to cover all of their people typically.
Okay.
So that's not an issue. This year, the big one is the bonus depreciation and the ability to write off stuff quicker, assets.
Okay. Now, how about the individual?
The individual, there was a number of them. The biggest one, obviously, is the new standard deduction. It's raised to $12,000 for a single person, $24,000 for an individual, which the IRS estimates that about 93% of the taxpayers will file using the new standard deduction.
Okay.
At the same time that they increased standard deduction, however, they got rid of the personal exemptions.
Right.
So all these $4,150 exemptions you used to get for yourself and your spouse and your kids and your dependents, that's not even on the 1040 anymore. You can get credit through the child tax credit, and you can get up to $500 through that same child tax credit for qualifying relatives.
Okay.
So,
all right. Well, some good tips there, and so one more question before we tell them how they can reach you and get some answers to all these questions. So we're both small business people. So my question to you is, when you think about growing your business, what keeps you up at night? What are your biggest challenges and obstacles to growth?
For a small to medium-sized business, I think it's, where people are wearing multiple hats. It's always difficult, but for me, it's the marketing. That's why I'm working with you.
That's right.
It's the biggest worry is just, while you're working on clients, you have very little time to go out and get new clients.
Right.
But you don't want to end and not have any new clients in the stream. So marketing is the...
Okay. I refer to that as pipeline, right? Keeping the pipeline full. So that's what keeps you up at night.
That's what keeps me up, is where am I going to find that next customer? Because I know I have competition in this tax resolution business, but they're few as good as me.
Right. I would agree with that.
Bada book, bada boom.
Bada boom, bada bing. So why don't we... thank you, first of all. This has been great.
Thank you.
For you who's listening out there, I mean, taxes is not something you want to mess around with. If you find yourself in a situation, the best thing to do is start early, make sure you're following the right procedures, and avoid getting yourself that letter from the IRS. It's probably the easiest way to take care of that situation. So, Paul, why don't you tell our listeners how they can reach you? Website, email, LinkedIn, all that good stuff.
Okay. Our website is Tax Relief Assist, ASSIST. We just shortened the assistance.
It's a .com, right?
.com. And you can find all our blogs there and all the information and all of the different tactics for tax resolution explained and so on. So it's a good resource. They can reach me directly through my email, which is p.peffer, P-E-F-F-E-R, at taxreliefassist.com.
Okay.
So they can email me directly, or they can call me. We have an 800 number, 844-805-8830.
Okay, and they can find you on LinkedIn as well?
Yes, I'm sorry. And LinkedIn and
Facebook.
Soon on Facebook,
okay.
and corporate page.
All the good social stuff that your brilliant marketing guy's doing for you, right?
That's right. That's right.
All right. Well, thank you again for joining us at the cafe. You can find out more about me, Angelo Ponzi, and read my blogs at the Ponzi Group. That's www.theponzigroup.com. And connect with me on LinkedIn. I also actually have a space on Facebook. And hopefully soon you can start to subscribe to us on iTunes and Stitcher and SoundCloud and iHeartRadio and all those good places. But for now, you can find us on Podbean. Again, thank you very much for joining us, and join me next week for lunch at the Business Growth Cafe.
Thank you for listening to today's discussion at the Business Growth Cafe with your host, Angelo Ponzi. Take a moment to subscribe to this podcast and visit our website at www.businessgrowthcafe.com. Read Angelo Ponzi's blogs at www.theponzigroup.com.
Live from NPR News in Washington, I'm Lori London. The Supreme Court is welcoming Brett Kavanaugh for his first day on the bench. NPR's Kerry Johnson reports the High Court heard arguments in 2 cases today.
Chief Justice John Roberts says he wishes Brett Kavanaugh a long and happy career on the Supreme Court. Kavanaugh's already made his presence known. He asked more than 10 questions during the oral